Well, the Reserve Bank, as we said, considered raising interest rates at its April meeting. It was thinking about anecdotal evidence of wage rises and increased migration to Australia, but it kept those rates on hold. Well, today, one of Australia's leading economic forecasters, Deloitte Access Economics, says the RBA has put Australia on a knife edge. Its principal partner is Stephen Smith, who joins me now from Canberra. Stephen, many thanks for your time. When you say the Reserve Bank has placed us on that knife edge, why is it responsible, do you believe?
Ross, we're concerned about Australia's economic outlook in 2023, and most of that concern centres on Australia's households. It's not just interest rate rises, there's also a rental squeeze, negative real wage growth, broader cost of living pressures. Australia's households are doing it tough. Those interest rate increases are really adding to the pain, and so we see consumer spending going backwards this year, and that's why we think the RBA may have gone too far in the last couple of rate rises.
You more specifically say there was no need for the two rate rises in 2023.
That's right. On our reading, all of the evidence suggests that inflation peaked in Australia in the December quarter of 2022. Still very high, but peaked and likely to come down through 2023 and 2024. That means that we think that the work of the Reserve Bank through 2022 perhaps should have left interest rates where they were and then let that play through. But hindsight's an easy thing, and the RBA does have a difficult job. So look, not critical, but just a different view.
Okay, so a different view, but then there is also the argument about the fight on inflation, and that inflation perhaps is not yet dead and going back to its 2 to 3% band. You've got, as you mentioned, rents rising in Australia right now. You've still got full employment and the prospect of a wages breakout. You've got oil prices that have spiked back above $80 US a barrel. All these things potentially are inflationary, including the very low Australian dollar. So, it might be a situation where inflation is not yet dead. Where does that weigh up as compared with the hurt that consumers and households will feel?
Well, I think a couple of points there, Ross. Firstly, the chances of a wages breakout and wage price spiral in Australia very, very low. We have seen some modest increase in wages, but nowhere near the levels that would concern the Reserve Bank in terms of putting pressure on inflation. Those broader pressures that you mentioned, certainly some of those will place upward pressure on inflation, but overall we see inflation trending downward through 2023. That's not to say there won't be some spurts and fits and starts of inflation over that period. Oil prices is a good example, and you mentioned rents. So the trend is down, but there will be a little bit of volatility still in price growth.
Okay, so there's a federal budget coming in 3 weeks' time. What role does the government have in trying to suppress the inflation and really maintain it? Because there are expected to be cost of living relief in there, but then even if the government starts handing out money, that's another inflationary impact.
That's right, Ross. And just like October, the government finds itself in a very difficult position in this May budget coming up in a couple of weeks' time. On the one hand, they need to be very careful not to stoke inflation in the economy. On the other hand, there are households genuinely doing it tough in Australia. On the Reserve Bank's own figures, around 300,000 households experiencing negative cash flow. That is, essential spending plus mortgage repayments exceeding their disposable income. And so, there's challenges on cost of living. At the same time, there's inflation pressures that we think are coming down but are still around. And so it's a difficult balancing act for the government.